Nigeria's 50 tax reliefs and exemptions. What you should know. Hello and welcome back to Discovery Learning Hub. Today we're diving into a major update from the Nigerian government that could affect many Nigerians, especially low-income earners, small businesses and everyday taxpayers. We'll break down what the new tax exemptions and reliefs are, who stands to benefit, what it all means, and how you can prepare. Let's get started. On June 26, 2025, the President signed 4 key tax reform laws. The Nigeria Tax Act (NTA), the Nigeria Tax Administration Act (NTAA), the Nigeria Revenue Service Establishment Act (NRSEA), and the Joint Revenue Board Establishment Act (JRBEA). These reforms aim to consolidate and simplify Nigeria's tax laws. Then, on November 3, 2025, the government unveiled a list of about 50 tax reliefs and exemptions that will take effect from January 1, 2026. The motive is to make the tax system fairer, simpler and more beneficial to ordinary Nigerians. So what exactly has been changed? And who benefits? Let's jump into the details. Key personal tax reliefs. Here are some of the headline personal income tax reliefs. Individuals earning the national minimum wage or less will be fully exempt from personal income tax. Those whose annual gross income is up to 1.2 million Nigerian nairas, equivalent to about 800,000 Nigerian nairas taxable income, will also be exempt from personal income tax. For those earning up to about 20 million Nigerian nairas annually, there will be reduced PYE pay-as-you-earn rates. Gifts received by individuals will no longer be taxed. Other deductible items now include contributions to pension funds, payments to the National Health Insurance Scheme, NHIS, housing fund contributions, life insurance or annuity premiums, interest on loans for owner-occupied housing, and rent relief, 20% of annual rent, up to 500,000 Nigerian nairas. In short, if you're earning relatively modest income, or have certain contributions or expenses, you stand to benefit. But remember, you'll need to keep proper records and ensure you're eligible. Retirement, capital gains and other exemptions. More good news in retirement and capital gains tax, CGT space. All pension funds and assets regulated under the Pension Reform Act will remain tax-exempt. Pension, gratuity and other retirement benefits as granted under the Act will not attract tax. Compensation for loss of employment of up to 50 million Nigerian nairas is exempt from tax. Sale of an owner-occupied house, personal effects or chattels worth up to 5 million Nigerian nairas are exempt from CGT. Sale of up to 2 private vehicles per year is exempt from tax. Gains on shares. If you make gains below 150 million Nigerian nairas per year or gains up to 10 million Nigerian nairas, they're exempt. And if you reinvest proceeds above the exemption threshold, you still get relief. So if you're thinking about your pension, selling your house, or you've got investments, these changes could be very relevant. Corporate and business incentives. For business owners and SMEs, there are also significant incentives. Small companies with turnover not exceeding 100 million Nigerian nairas and total fixed assets below 250 million Nigerian nairas will pay 0% company income tax. Labeled eligible startups are fully exempt. Firms that raise worker salaries, give wage awards or provide transport subsidies to low-income employees qualify for a 50% additional deduction under the compensation relief. Businesses that hire and retain new employees for at least 3 years can claim a 50% employment relief deduction. Agriculture. Companies into crop production, livestock or dairy farming will enjoy a 5-year tax holiday. These measures are clearly targeted at smaller businesses, startups and the agricultural sector. The government appears keen to encourage job creation, support low-income workers, and boost sectors outside oil and gas. Other tax exemptions and VAT/stamp duties. Beyond income and corporate tax, there are other reliefs. Many goods and services will be subject to 0% VAT or full exemption. Basic food items, rent, education materials and services, health and medical services, pharmaceutical products, agricultural inputs, fertilizer, seeds, live animals, solar equipment, baby products, sanitary towels, disability aids, electric vehicles and parts. Small firms with turnover less than or equal to 100 million Nigerian nairas will not be required to charge VAT. Withholding tax deductions. Small companies, manufacturers and agricultural businesses are exempt from withholding tax on income and payments to suppliers. Stamp duties and related. E-money transfers below 10,000 Nigerian nairas. Salary payments, intrabank transfers, transfers of government securities or shares, documents for transfer of stocks and shares, these will be exempt. These changes mean that everyday transactions, for many Nigerians, will be lighter on taxes. It has the potential to free up cash flow in households and small businesses. Why it matters and what to watch. Now let's talk about why this matters, and what you need to watch. Why it matters. It's a shift towards more progressive tax policy. Reliefs targeted at low-income earners and smaller enterprises. Could boost economic growth, encouraging investments, job creation and expanding non-oil sectors. Improves cash flow for many Nigerians. More disposable income and more business reinvestment. What to watch. Implementation. Will these reliefs be effectively rolled out from January 1, 2026 as promised? Awareness. Many Nigerians may not know about the reliefs. Communication and education will be key. The government's outreach drive says they'll engage influencers, journalists and business groups to ensure accurate information. Administration and enforcement. Ensuring that those eligible get the benefits, and that tax evasion isn't inadvertently hidden behind exemptions. Risks. With many exemptions, there is the risk of smaller revenue base unless the tax collection and economy grow accordingly. What you should do. If you're a viewer in Nigeria, here are 3 action points. Check your income and qualify. If you're earning the national minimum wage or gross up to 1.2 million Nigerian nairas per year, you may be exempt from personal income tax under the new law. Use the deductions. If you have pension contributions, NHIS payments, housing fund contributions, etc., make sure your employer or tax preparer is accounting for these in your tax return. Business owners. If your turnover is under 100 million Nigerian nairas, or you're a startup, or you're hiring new employees, make sure your business is registered correctly, and you know how to claim these reliefs. Talk to your accountant or tax advisor. Conclusion. So there you have it. A breakdown of the 50 tax reliefs and exemptions announced by the Nigerian government, aimed at easing the burden on low-income earners, SMEs and everyday Nigerians. If you found this video helpful, please give it a thumbs up, share it with someone who needs to know, and leave a comment below. Are you eligible for any of these reliefs? How will this affect you? Don't forget to subscribe to Discovery Learning Hub and hit the notification bell so you won't miss our future update. Thanks for watching, and I'll see you in the next video.